Hello and welcome to the Weekend Investing Daily Byte of 11th of September, a topsy-turvy day again after some mild push up yesterday. This morning also felt like, markets are going higher, but then towards the mid of the day, the market did a U-turn and completely collapsed down. So as I was mentioning yesterday, the markets are in no mood to go anywhere. We are just bobbing around 25,000, which is not a bad thing. I mean, we can't be expecting to go up every week, every month, every half a year. There will come, periods where just time consolidation will happen, and we have not yet even started that. I think we are still very much in the upward trajectory phase, and maybe post this quarter, once uh, the next quarter, once the US elections are done, once the festive season is assuring us of continued growth or not, uh, I think that may be a fulcrum on which the markets may look towards the next few months or next few quarters. So no harm done, but I mean, just a consolidation kind of a move. IT sector, however, is making some kind of a comeback. We will discuss how sectors have rotated in the recent past and in the longer term, and how you should be looking at sectoral rotation. First, try to hit on the subscribe button. We are getting significant number of subscribers, but a lot of people tell us that a lot more subscribers should be here. So if you haven't subscribed, please do so. It's my request. Where are the markets headed? So again, this is, if we see, this is the multiple number of attempts at 25,000. So if this line is nearly 25,000, we had one attempt beginning of August, post which we had that crack. Then you had another attempt here, third attempt here, and then another one, fourth here, and then fifth here. All these 25,000 and above attempts are failing. um, there are some sellers who have decided to sell every time market comes at 25,000. That's fine. The bucket knocks at certain levels, round figures mostly, for certain number of period, and then it just breaks out and goes much higher than that. So that phase is yet to come. It may also happen that we may, consolidate between 23,800 and 25,000 for some time. That is also possible. And if there are bad news, or if there is bad news, we can possibly even come down to 22, 23,000 levels, which is not out of the realm of things. So having the right expectation is good. 10 to 15% kind of market moves is very normal at any point of time. So at 25,000, if 10 to 15% would mean, maybe two and a half to about 4,000 points. So anywhere between 21,000 to 25,000 is your normal operating range, I would say. And then, of course, the crisis can start if it goes there. Nifty down 0.5%. Nifty Junior also down 0.5%. Same situation, went up but could not cross the previous high point. Lethargic move here. You also had mid caps give up 0.25%, but again hanging very near all-time highs, so no problem here. And small caps also losing 0.78%. So small caps actually lost more, and somewhat of a bearish engulfing pattern again here. So again, I think the support will again get tested near 18,000 soon if this comes down. So no, nothing to really report on a day-to-day in such markets. Bank Nifty, again, just where we were 1st of June. We are just here and there on that. So uh, no moves as such to really point out. Advanced decline. Advances were nicely up in the morning, and declines were small, but we've headed towards the end of the day, and we had 348 declines to 150 advances. So declines 0 to 2% actually took over. So mild declines across different segments of the market. The good part, if we were to see, is that FIIs, or in the last many days, are continuously pumping in money, and domestic institutions are, somewhat slowing down their purchases, and on certain days even selling off some. Overall, if we see institutional net, there has been buying. If you combine FII and DII cash, there has been net buying across, barring a few days where it was negative. Heat maps were virtually red Tata Motors on some analyst report losing 6%. Uh, I think Goldman Sachs or somebody mentioned that it could be 20% down, and these heavyweight analysts have a lot of impact on market sentiment. And when they announce that this could be down 20%, people will blindly just sell off. ONGC also down 3.48%, BPCL down 1.65%. Crude is hovering near $70 at multi-year lows, which is very good news for India actually, from the front of the foreign currency issue, the fiscal deficit, the trade deficit. But the point is that the government should now cut back on petrol and diesel prices now that the crude prices are at multi-year low. A 10-15 rupee cut here will really give a very big boost to consumption. And but unfortunately, tax is like an addiction. Once government starts to receive tax on something, it is very difficult for them to give it up. It is almost like salary. I'm sorry if that sounds a bit mean, but yeah, I mean that's how it is. I mean it's like money coming in every month. And very recently, in fact, they've stopped gloating about what kind of GST collection that they have, because it sends a very negative impact. I mean you are charging the public, of course, for public good only, supposedly, but you don't have to rub it in that see, we got 1.8 lakh crores from you this month. So I think they are understanding that, but I think this will be a very good step if they do, is to give up or step back their gas pedal, by releasing some taxation margin to the user. Even 5 to 10 rupees on petrol and diesel will go a very long way in giving that boost to the economy. Bajaj Auto doing very nice at plus 3.94%. Lone Wolf out there. Asian Paints ahead of Diwali always perks up plus 2.2%. And you had host of other stocks giving up. State Bank of India, if you recall, 3-4 days ago had dropped 4%, and that was a good sign that banks are leading the market down, and that is exactly why State Bank of India has again fallen. Whenever you will find State Bank of India up or down, you will find the rest of the market also likely to be in similar. This is like the leading indicator for India economy. So this, more than any other stock, I think gives a directional sort of view of the market. Nifty Next 50 mixed bag, but a lot of red as well here. PNB, Canara Bank, REC, PFC. So all public sector orientation, HAL, IOC were down. Some privates as well. VBL, Zomato, Naukri, Havels, Berger Paints. These were the ones that stood out on the green. Um, Vedanta, IOC, Motherson losing quite a bit on profit taking today. In terms of sectoral trends, again, FMCG, consumption, pharma, and IT are at the top. It is giving a very clear indication, as I've been mentioning on a daily basis, that the risk of trade is happening. People are moving money into safer, more defensive sectors, and drawing withdrawing money from PSU banks, public sector enterprise stocks, energy, commodity, metals, autos, real estate, which are higher risk, even higher beta segments, so as to say. So, I mean, there is no place to hide, but these defensives will probably fall a bit lesser than these in a market fall. In the last 1 week gone by, only these four defensive sectors, FMCG, consumption, pharma, and IT, have managed zero or plus green moves. Otherwise, everything is negative. So it is a very clear picture of how that shift is happening, and that's uh, a very good indicator that market is not going to run away likely soon, because whenever markets have to run away, these sectors will start to perk up in a very big way, and these will take a back seat. uh, PSU banks are now breaking down virtually from the bottom that was made in February 2024. It is absolutely not a very great sign. It is a crooked head and shoulders pattern also. So this 6400 to 6600 range, I think, is crucial. If we are not able to hold here, there can be further damage, and most of the banking stocks are looking at that kind of a damage. Uh, the damage is also happening across many other sectors. But there are stocks, which are really perking up, maybe because of stock specific news. Some news of some land sale is happening in Prism Johnson. So 2 days of gains, 19% yesterday, 11.7% today. Amazing kind of re-rating of the stock happened in just 2 sessions. Coming to the sectoral story, IT sector's big comeback. If we see the larger picture from, let's say, COVID bottom till 2021 December. So 1.5 years or so, uh, you had metals and IT do really well in that particular approximately 18 months. And FMCG was not doing so well versus metals and IT, and CNX Finance and Nifty were sort of in the middle here. So that was his picture for about 18 to 20 months. But then January 22 onwards, PS, public sector enterprise and public sector banks, sort of took the lead, and they became 160, 180% gainers, while IT was almost flat at 10%. Nifty was at 44%. So can you see just, 18 months or so here, uh, maybe even more, 21 months here, and approximately, couple of years or a little bit more than that. Uh, so, about 30 months here, very different set of rotation. So earlier, IT doing really well. Now IT in this period not doing so well. Public sector enterprise, public sector banks doing well. And then, last 3 months, public sector banks are down 2%. Public sector enterprise stocks are also falling. Pharma is going up 27%. IT is going up 33%. So again, that shift is happening towards IT and pharma. Of course, we can't say how long it will go, but that's the sort of rotational sectoral shift that I want to point out. And, we want to make use of these sectoral shifts. So sectoral shifts, because of the all the noise around different stocks moving on a day-to-day basis, very difficult to for a layman to really see how the sectoral shifts are happening. But if you're doing it on a quant or a very methodical way, then you will be able to see the sectoral shifts happening. So all sectors ranked based on last 6, 3, 6, 9, 12 months returns between the last 4 years, for instance. So you can see here that uh, September 20, this was the ranking. So IT was doing well. PSU banks were at the bottom. September 21, again IT was doing well. PSUs were rising. They were at rank 13. In September 2022, PSU banks came on the top, and IT actually fell to the bottom in terms of ranking. September 23, IT was rising again, and PSU banks were falling from September 2022. And in September 24, PSU banks have gone down to rank 15, and IT stocks have gone from 11 to 5. So can you see the sort of change of sectors and other sectors also, in terms of public sector enterprise stocks being at 16 here, and at number 1 in 2023. So when you have a strategy which can really pick stocks, automatically these sectors will start to enter your portfolio, and you will not really have to predict sectoral changes, because accurately predicting changes in sector is very, very difficult. I mean, and of course uncertain of the length of that trend being available for you. So relying solely on buy and hold can lead to frustration, patience, and opportunity cost. So if you had bought IT in 2021, and then you had this entire few years where it didn't do well, maybe at that point of time you saw a lot of other stocks do very well, and you were at recently you were you got into a FOMO that my portfolio is not doing well, but my neighbor's portfolio is doing well. Let me sell all my IT and go into public sector enterprise stocks. And now in the last 3 months, that reversal is again happening, where IT has done well and public sector enterprise stocks not doing. So it becomes like a double whammy for sometimes for most people, is that you go from one stock to the other. You lose money here, then you go to the next one and you lose money there, and you go to the third one, you lose money there, and but sure enough, I mean, very soon all your capital is gone. And if you just stick with one sector or stock or a group of stocks, then maybe that doesn't go for 5 years, and then you really get FOMO on that. So a lot of behavioral psychological challenges are there in terms of trying to do it in a, in a discretionary manner, let's say. So adopting a strategy which bases the price trend, so BBC principle, bhav bhagwan che, automatically helps you adjust to sectoral shifts. It will certainly get you out of stocks or sectors which are bleeding uh, sooner or later, and it will get you into stocks or sectors which are doing well sooner or later. So this approach, while it may not give you the best outcome possible, I mean that the best outcome is obviously hindsight 2020. I should have bought that here and I should have sold that here, but it can give you an opportunity to at least beat the benchmarks over a period of time, and be able to give you a happy state of investing where you are reasonably sure that I will not sit with duds for too long. My system will take it out from my portfolio. So this is how at least momentum investing works. And a lot of folks who actually buy sectoral mutual funds or things of that kind, like people have bought last 3 months defense mutual funds, and they were sold because it had really hit the ceiling and it was easy to sell. Now many of them are sitting in losses, and you don't know when that defense move will come again, or is it just a blip and it will carry in the next few months. So very, very difficult to do it otherwise, but if you are able to do it, fantastic. Please share your experience, and thank you so much for watching. I would request you again, please subscribe to the channel. Please like and share this video with your friends and family. Who knows, somebody may get some positive output out of this. Thanks. Bye.